We have new inflation data in yesterday around the CPI. We'll be getting PPI here in about half an hour. Yesterday, the market responded not favorably, as the data wasn't as strong as expected and hoped that it would be. Before we get going on today's show, please hit that like button, subscribe to our channel. Nothing we say is financial advice. Kevin and I are not financial advisors. We're a few guys who love following the markets, looking at the trends, putting out our predictions for it. So do all of your own research before making any buying and selling decisions. Kevin, as you can see, not in my usual spot, in New York for a few days. How are you doing, my man? How'd you feel about the data that came out yesterday morning?
Doing good. Happy to be up this early in the morning. Excited to talk about some of the stuff that happened yesterday and a lot of the stuff that we're seeing in the charts. Data yesterday, I wasn't going to be too concerned about it either way. Again, I don't believe that we are in, I said that tweet yesterday, that we're in September of 2022 when everyone is super reactionary to CPI, FOMC, all that data coming out. You're not seeing it in the charts where you're seeing massive candles go up and down in both directions within a matter of 2 minutes. I miss those days. Those were fun. But yeah, it's very boring. I think a lot of people had already not priced in, but expected CPI to come in lower. We did. The numbers weren't necessarily the greatest, but at the end of the day, it's not something that the market reacted to like too reactionary to. I would say they weren't reactionary to it as much. We saw that pretty much TradFi markets go up and down. They went up to like 200 for the Dow, down to negative, then back up to like 180, and then it closed negative again. So markets aren't sure what's going on. It's a lukewarm response, and it'll be really interesting to see because we are getting to a place where I think we are close to local top for a lot of things.
Yeah, we saw a little bit of a reaction as soon as the numbers came out. People saw the headline numbers, but then they dove into it. One of the bigger areas that the Fed wanted to see is food. That is starting to come down a little bit. Same with, vehicles. We still haven't seen much as far as like housing goes. Like that's still been pretty sticky inflation wise. So I think that's one of the bigger concerns. Looking at the numbers, core CPI came in at 0.4% month over month, which was what it was expected to be. Year over year, core CPI came in right at expectations again, 5.6, actually up from 5.5 last month. So these numbers are not like indicative of the Fed being able to pause anytime soon. Like to me, we'll see what PPI looks like, and we still have PCE to come out the last week of the month, but it doesn't feel like they can take their foot off the gas anytime soon. Maybe they can just do one more 25 and then hold, but this was not, I don't think, the encouraging. People saw like the CPI year over year at like 5%, which was at 6 last time, and they're like, oh, that's great. But that's like not really the Fed's main target. It's that core number, and it's the PCE.
Yeah, 100%. And again, 5% inflation. If we're looking at the headline, still 5% inflation. And the goal is 2. This could be death by small little 25 basis point hikes to that point. It's not fun, and the unfortunate thing is probably would take some time for us to get to that point too. So again, it's still a situation where maybe it looks good. Obviously down from 9.1% inflation that we had, what was it, like 9 months ago? But at the end of the day, they're still fighting. They're still going to raise rates. We're still in a situation where there's a good chance, inflation could spike if they're too lenient here. So it'll be really interesting to see how it plays out going into the summer. I think the summer is going to be not reminiscent of 2008, how that summer played out, but I do think that, a lot of people are getting really overly excited too early, and I think that's across both the markets and also people just hope in the economy that it's going to turn around. So I'm cautious still. I don't think anything's changed in my outlook, but it'll be really interesting to see how some of that PCE data comes in, and then again, what happens in May once we get some more for April's CPI data.
Yeah, absolutely. That was all we really had on that data front. Like I said, we'll have more coming out in a few minutes. If you're watching the playback of this, you'll have already seen it. We did get FOMC minutes yesterday as well. Sounded like it was pretty unanimous around 25 basis point hike. The Fed chairs are seeing a recession starting later this year. I know you're on the record multiple times saying we're already in a recession, but the Fed thinks that we're going to enter one later this year. And I don't think that there's anything there's nothing they can do to stop it at this point. Like the train has left the station. It's got to get to its destination. And that, means we're going to hit a recession sooner than later.
100%. Yeah. It's, Yeah, it's. I think, like I said, I think we're in a recession. And it's the same thing as it was in like 2007, late November. That was when we technically entered the recession for the housing market crisis, and then it led into 2008, Bear Stearns collapsing in March, and then September, October just being absolute bloodbaths in the markets. And that's another thing people I think need to realize. Like, the market is not the economy. So if the market's doing extremely well, great. The economy doesn't necessarily have to be the same narrative that's playing out. Obviously, if people are making money and it's green, there's a good chance that that's a false flag, and that's honestly what I'm seeing. And that could be because we're seeing resistance at a lot of these levels here. But yeah, I don't see I don't see a world where we're not in a recession by the end of this year, at least one that's unanimously agreed upon. And I think the Fed realized that maybe the main crisis was going to be something that could have spiraled us into something even worse. That's why they all agreed on 25 basis points, and there was no question of whether they were going to raise any higher than that. And that's why people, I guess, are hoping that it's 25 and done in the next FOMC meeting.
Yeah, yeah, I think that's probably a pretty good assessment of the situation. Let's move into some of the charts. We saw ETH take a big rip
Yes, we did.
overnight. We had the unlock, I believe. As far as I know, it went smoothly
Mhm.
for people running validators. There was a lot of questions on whether or not that'd be bullish or bearish for price action. We got our answer right there. What are we seeing in the charts, Kev? Where do you want to start with this?
Yeah, we start with ETH. Again, with ETH, I'm not surprised. It hit 19. It's at 1989 right now, so that's pretty good. I think the height of it was this morning at where 1997. So pretty good price action. You can see that green candle right there. The only thing that I'm cautious about, again, this is just me looking at this right now, doesn't necessarily have to play out this way. But what if we are putting in something like this? Yeah, something like a parallel channel like that, going pretty exponentially up. It doesn't have to play this way, but again, the last parallel channel we're trading was right over here, and we broke down, and this was obviously the banking collapse. But at the end of the day, still making that, and we also broke down here into one that we shot back up. So these parallel channels, making higher highs and higher lows. There's a reason why these break to the downside. They usually trap investors who are going long. It's not a bullish indication, but looking at this, I think we're hitting the top of this channel. Do I think there's a little bit more room? Yeah, I do think there is. And I think that we talked about this on the show last time we were together. That was 2028, this level right here, this red line. That would serve as a possible double top. We haven't hit that range since August of 2022. And then again, we tapped this back in like May of 2022. So this level is pretty important. It could be a triple top, it could be a double top, with however you look at it on the daily versus the weekly. But I think that there is a little bit more room to the upside. Now, not to say that there couldn't be a little bit more of a squeeze. A lot of people are. It's a really weird place to be right now. And again, we could look at the charts on CoinGlass for longs versus shorts and funding rates too, because a lot of people, like we talked about, psychologically, Bitcoin being over 30,000 are kind of bullish right now. But at the same time, there's that group that is like, okay, this is major resistance. Is it potentially, this is where we start to pivot and go back down because we're overbought on a lot of time frames. If you look at Ethereum right now, we're pretty overbought on that. That's a daily. We'll be overbought on the daily by the end of today. But if we look at the weekly for Ethereum, extremely overbought. Let me pull this up. Extremely overbought right here. That needs to come down at some point. The momentum is too far to the upside. We're trading at 199 on the stochastic RSI. Let's go to the daily. Daily is pretty high up there too. We're at 73 and 65, but there's still plenty of room just to go up. So that could be, touching this top. Could even be the move right now. The move that pushed up to 1992, where we're currently sitting at. And that could just bring us to overbought. And then let's see what the monthly is. The monthly, I think, moved up pretty fast too. Yeah, the monthly is moved pretty quickly for a lot of these coins, and Ethereum is no exception. But yeah, we can see also here, August 2022, wicked up, got rejected. Then here we all are also finding we got wicked up, and we're still climbing. But again, we got a good amount of time left in the month. So it'll be really interesting to see how Ethereum plays out over the next few days. I think that we'll probably get this double top, this triple top, if we're looking on the daily for sure. But again, what does the Shanghai upgrade mean? Pretty much means that validators have tons of supply now. So if the price continues to push up, that supply, obviously is worth more. It's a good chance that some of them could dump it on the market. And again, I talked about this in this tweet we sent out yesterday, but ETH dominance is pretty strong with Bitcoin dominance right now. Now, ETH dominance is not what Bitcoin dominance is. It's around 20% around there. But, together those make up about 68 to 70% of the entire market cap of crypto. So if those two are doing pretty strong right now and the alts don't have a chance of pushing up at all, obviously, if either of those dumps, it's going to take down most of the market with it. So it's kind of a scary area right here. Obviously, this Shanghai upgrade is a beautiful opportunity to get out of the market if you were a validator and you've been in it since $600 ETH. Not a bad return, but I don't think all of them will sell it, but I think a good amount of them are potentially going to sell. We've seen tons of wallets sending ETH back and forth between exchanges and then from private wallet to private wallet. So it'll be really interesting to see when this does decide to drop, how bad it will be.
Yeah, absolutely. Let's get into Bitcoin. We can also look at the DXY if you want.
Yeah.
I noticed that yesterday we saw a big red candle on the way down, right when CPI data came out, I believe. I don't know if that was around that time or slightly before, but big red candle on the DXY yesterday has been kind of fighting to stay above 101.
Yeah, DXY got its ass kicked yesterday on pretty much as soon as the data came out. Not surprised there. This thing's been moving 100% on data. It was just this candle here. Broke right through the support at 102.035. It's coming down. Obviously, on the daily stochastic RSI, there's plenty of room to the downside. This double bottom that we were talking about still isn't invalidated technically. Again, there's 2 or 3 scenarios that could potentially be playing for the DXY. But I'm going to put this line right here. This will be the double bottom. Let's just do white for right now. So if we zoom out, we can see that we came down. We found the middle of it. We came down. We could potentially just still wick down to 185, so 100.845, and find support there. That would kind of line up with what the stochastic is doing right now. And then maybe we trade sideways for a bit. The other situation would be hitting the second white line. Let's change that one to blue. We could potentially hit this line down here, and this isn't a double bottom, but we are finding major support here where we have support here, support back here. So this could be 1 or 2 areas of support we could find. I'm not necessarily bearish on the dollar still. I still think that there's a lot of information that's still to come this year. I look at the weekly too. This 200 EMA is sitting right around this 99.32 level. So I wouldn't be surprised if we do find some support there, or if we just trade sideways and this just follows us up into the next move to the upside. But we look at the weekly, we're almost completely oversold on the stochastic RSI for the dollar. And then if we look at the monthly, we are oversold on the dollar for the monthly. So I do think that there is going to be a move to the upside. Again, this could be playing out into the end of the year between now and, I don't know, December, January of next year. It takes time. But there's no indication that the dollar is dead. I think a lot of people have kind of bet against it, and that's why we're seeing risk assets shoot up. Obviously, as the price of the dollar goes down, risk assets are naturally going to go up. That's why we saw Bitcoin kind of push up over the past few weeks. You need more USD to buy Bitcoin now, so it's going to be like that for all risk assets. Dollar, just nothing too concerning at the time for the time being. I think that we just got to see how this pattern plays out on the shorter time frame for the daily. Again, this is probably the most important one out of all the time frames for the time being, because if we do find support here, we're oversold, and we start to make our move to the upside, it's most likely that we're seeing a macro double bottom, or that W pattern, which is a pretty good recovery pattern. So that's what I see for the dollar. Nothing too much other than that.
Okay. Let's take a look at Bitcoin, or I'm not sure if there are any stocks you wanted to look at, but let's keep it on moving.
100%. So Bitcoin, let's just look at this. So we were talking about the supply zone that was right here between this blue line and this white line. We were marking it as, okay, this is where there's major resistance, and there was a lot of resistance. And again, we could look at the longs and shorts on CoinGlass if we want to, but we were trading here, and then we finally broke out. And again, that could have been helped by the dollar going down a little bit. But what I'm seeing here is that we're in this range now between 28,809 and 32,319. We're just trading above here. I think that's it's, if we can see back here, there's tons of, trading that occurred in here between support and resistance, support and resistance. I think that that's the potential move here if we're going to be filling between these two. And again, we don't even have to look at this as a technical analysis standpoint for why it's trading here. Let's just be honest and think about how much Bitcoin has pushed up since the beginning of the year. It's been an absolute rocket straight up. And, sure, you can say, as the bank failure right back here in March, dropped it pretty fast from 25 down to 19, and it absolutely did. And could it happen again? Sure. I wouldn't be too concerned if it did. Sorry, it's got noise in the background. But thing is, we've found a lot of support in here, but we're seeing these gaps, and we filled a lot of these gaps. We filled this gap here. We filled this gap here, on the upside, climbing up. This gap right here is a little bit tricky. I don't think that there's enough buying power right now for Bitcoin to push up past, 32, 33K. And I think a lot of people are actually getting super bullish based off of us pushing past 30K. And now we're back above it, and we're 30,200-ish around there right now. I think that a lot of people might be going long here, and that might be detrimental. And again, we're seeing volumes pretty low. Like the volumes that are low down here compared to where they were when the price shot up here, like it's a huge bearish divergence. Like this is probably one of the biggest bearish divergence I'm seeing on the daily. If you look at the weekly, again, bearish divergence here. Price is pushing up again right at this resistance level, right where we're getting into this area where it could go either way. Most likely it's not going to go the way of longs, probably going to go the way of shorts with how everything is overbought on the stochastic RSI. Volumes are coming down as the price is pushing up, and you got this 50 and this 200 super close to each other, and you got massive resistance here on the weekly and on the monthly too. Like this 32,319 is extreme resistance. We've seen wicks down to it and found support in bear market and bull markets. And then the bear market, we've only tested it one time here. I wouldn't be surprised if we test it one more time and it gets tons of people excited, and we just break down from here. It doesn't have to be instant, but I do think that it's going to be pretty nasty considering how close these 50 and this 200 is on the charts. Now, I think that because we're going in this range, we're going to see trading back and forth. And I also want to pull up Bitcoin dominance because that might be playing a huge factor. Like right now, Bitcoin dominance is seeing a little bit of a pullback. It was at 49.04 at one point. That was the height of this move that we saw. But when I'm looking at it right now, we saw a little bit of a pullback back here in March of, last month. And then we started to see a push up, came down a little bit, came to oversold, and then we pushed up again. I don't think that we're done with Bitcoin dominance by any means. I think that there's still plenty of room to the upside. And if Bitcoin decides to make that move to that upper level of 32,319, I think that that's going to probably bring Bitcoin dominance closer to 50% of the entire market cap. And again, we can look back at the last time Bitcoin dominance was this high. Currently, right now, we're looking at June of 2022, right before the collapse, and you can see how fast that red candle came in when Bitcoin price just absolutely tanked. And then prior to that, we were in a bull market where we were at the height. Let's see, that is from this target right here. That's July of 2021, and that was after May being a pretty nasty month for Bitcoin when everything pulled back in 2021. So right now, what I'm seeing, Bitcoin dominance is really important to keep an eye on. It's pulled back, but I don't think it's done quite yet. This yellow line right here on the weekly, this 51.51, I wouldn't be surprised if that's the final target for Bitcoin BTC dominance. Does it need to get there? No, not at all. It's whenever the market decides to move, Bitcoin dominance is going to tank with it if all the money leaves the asset. But I do think that we still have a little bit further to push on, and this could be slow grind up until like maybe May, June, to the point where we absolutely just decimate alts. And again, because Bitcoin dominance is so high in Ethereum, ETH dominance is so high. Let's pull up ETH dominance. Sorry about that. Yeah, ETH is at 19.8, so it's gone up, obviously, because of Shanghai and then the price of ETH going up. I don't think alts have a chance right now. I do not think that any alts have a chance to be shooting up at this point. There's major like a stranglehold on some of these coins, and maybe they're pushing up a little bit, but I don't think that there's much more room to the upside for any of them. I think that the potential push that everyone's talking about, an altcoin run happening, I don't see it with dominance being this high. And again, Bitcoin or ETH decide to dump, everything's going to bleed underneath it. So is this a great time to enter short positions possibly for some alts? No idea. I will say though, I felt pretty comfortable in entering. I entered 2 positions, so I'm currently short on the market. Again, I think it's because with dominance being so high and it's only going to grow, and when it does decide to move, it's probably going to be pretty fast for a lot of these altcoins. I feel comfortable finally being here in this time in the market. Could it push up a little bit? Yeah, definitely. I think that there's a good possibility we see that 32,319. I don't think it's going to break down instantly from here, but I do think it's coming soon. And we've been seeing this play out for 4 months. Maybe the 5th month is the one where everything breaks, and it wouldn't be too different from what happened in 2008 if we're looking at traditional finance, where that was the top of the market, and then it just started to absolutely dump after that. So it'll be interesting to see. I've talked far too much about Bitcoin dominance. JWeb, I'd love to get your thoughts. I think you're on mute, buddy.
See, I travel and shit just goes sideways. My thoughts are I'm selling some ETH into USDC right now. I took some profits on on some positions, and I think we're going to keep, maybe we hit that 2028 level, but this to me still feels like a good opportunity to just wrap in some profit here and look to buy back in, closer to 14, 1500s. I think that we are going to hit that before we really take off again. And who knows when the hell that's going to be. So, we just hit, I'm like watching the chart live. It's testing 2000 right now, and it just broke through actually. So that's, this is going to be an interesting start to the day. We got more data in like 9 minutes. I don't know how much that's really going to play into ETH, but
nothing.
I don't think it's really going to do a whole lot there. So that's really all I got, Kev. I don't have a whole lot of analysis otherwise. I'm guessing you don't really want to dive into alts or anything. You've made your point pretty clear there that a lot of them are just kind of banging their head and not going to have the liquidity to really get driven. We're not going to see any god candles on alts anytime soon.
Yeah, like I'll just add this. Like again, maybe we do. Maybe I'm wrong, right? Bitcoin dominance just goes down and alts have this massive run. I don't think I'm wrong, but I look at the charts and I see how strong ETH and Bitcoin are. Again, those are the 2 major assets. It's been running since the beginning. We have not seen alts run at all. Man, these trains are going crazy behind me today. But I think it's how I live in the sticks. No, I'm just kidding. But definitely think that because the dominance is so high and these alts are capped in their potential and they're pretty much all overbought, I feel comfortable being in short positions right now. Again, could it push up a little bit? Are we at a major resistance right here? Definitely. I think that we're at this place where it can go one of 2 ways. Either it goes down a little bit and then it pushes back up, we just hit our head and ass back and forth between support and resistance, or we just go back to like the Stone Age and it just absolutely tanks. And I'd rather be in a position right now and take a little bit of see some red in the P&Ls, profit and losses, and be right 2-3 months from now. I'll take it as long as I'm in this position. I have some exposure because I truly do believe that the market's going to go down. We're in extreme resistance. So people are just way too greedy right now, and again, you and me are pricing in summer being kind of a spike with OPEC and a bunch of other stuff that is still to come. I still think that this fight's not over, and I don't know. I feel comfortable just wearing big shorts right now. We're going in the summer, and I think it's a great time to be wearing shorts. Like for me personally, can't tell you what to do.
Get your pair of Jenkos, cut off from the calf down, get yourself some big shorts right there. Love it. That is going to wrap it up for today. We'll be back with more information, more data tomorrow. I think you made your thoughts pretty clear there, Kev. So I think we are all set. Thank you everybody for watching today. Hit that like button if you haven't already. Subscribe to our channel. Drop a comment. Share us out. Talk about how great Kevin's analysis is because he's pretty damn good at this. So we'll be back. Thank you for watching Money Never Sleeps. Have a great day.
Take care, everyone.